Hello and welcome to Business Incorporated live on Channels Television. It's a brand new trading week right here. Here's what's coming up in the next 55 minutes. The Egyptian government issues 10 billion Egyptian pounds worth of floating rate notes, treasury bonds. And the National Bank of Rwanda and the Capital Markets Authority have introduced a draft regulatory framework for virtual assets. And gold prices inch up today, supported by a weaker dollar and a safe haven flows amid fears of a global trade conflict. It's great to have you join us. I'm Ladi Williams. Let's get a check on the markets we track now. Starting with commodities, we see the oil markets as the prices are steady today as concerns over the impact of U.S. import tariffs on global economic growth and fuel demand, as well as rising output from OPEC Plus producers. That cooled investor appetite for the risk asset. There was a 0.18% uptick there, $70.49 a barrel for Brent crude, still holding up to that $70 psychological level. Well, WTI trying to get back to that level, $67.19 a barrel. Let's get a check on gold now. We're seeing gold prices inching up today, supported, yes, again, by a weaker dollar. $2,912 per ounce. That's for spot gold. U.S. gold futures around the same margin, 0.20% up. But on the flip side, silver not shining as much, 0.30% down at $32.42 per ounce. Platinum staying unchanged. Palladium down a big 0.40%. Well, investors will be watching out for the dollar index hovering near a 4-month low that it hit last week, making the greenback price gold less expensive for overseas businesses. So other stories now. The Manufacturers Association of Nigeria have raised concerns over implementation of certain provisions of the Financial Reporting Council of Nigeria, particularly those relating to charges on non-listed entities. In a statement released to the media, the Director General of MAN, Mr. Segun Ajayi, says the provisions currently implemented pose challenges to the manufacturing firms, majority of whom are non-listed entities and categorized under current definition of public interest entities of the Act. He warned that the implementation of these provisions would adversely affect manufacturing companies, the majority of which are non-listed entities but are now classified as public interest entities under the new Act. The new Section 33 introduced under FRCN Amendment Act 2023 mandates annual charges for non-listed entities calculated as a percentage of their annual turnover, the percent of the annual turnover for companies with turnover of more than 10 billion naira. And the Commonwealth Businesswomen Africa has held its biannual summit for 2025 in Lagos. The meeting, which coincides with the celebration of International Women's Day, serves as a platform to explore the challenges that women face and prefer possible solutions for that. The Minister of Arts, Culture, Tourism and Creative Economy, Anatu Musa, raised concerns on limitations from culture. Our correspondent Amy John McCoy reports.
Members of the Commonwealth Businesswomen Africa, CBW Africa, have invited friends, associates and leaders in various fairs for their 2025 summit. While building on the global celebration of International Women's Day, this meeting has the theme, Synergies for Sustainable Prosperity, uniting trade, health innovation, technological advancement, and clean energy solutions in Africa.
Together, we will explore how we can create synergies among these critical areas, ensuring that women's voices resonate in these discussions. We must confront the challenges head-on. Women are often sidelined in decision-making processes that affect our lives and our communities. We need to raise our voices and demand equal representation, and that means we have to be skilled.
One of their friends is the Minister of Arts, Culture, Tourism and Creative Economy, Hannatu Musawa. Her concerns are around the limitations rooted in cultural roles and practices.
My challenge is to ensure that we can tap into that culture as a bastion of our strength, as a bastion of our unity as a people. While Nigeria's rich cultural heritage has focused some of the continent's most creative entrepreneurs, it has also posed challenges, particularly for women, in breaking free from traditional roles. Traditional roles, there are many traditional roles that we can tap into that will empower us as a people and as a community. But there are some traditional roles that we have to negate in order to ensure that we're able to empower ourselves as women and break free from those shackles that continue to hold us down.
The wife of Lagos State Governor, Ibijoke Sanwo-Olu, has a broader view.
Distinguished guests, I boldly state that women-owned businesses remain a formidable force in Africa's economy. Despite this, challenges such as limited access to finances, markets, and digital resources continue to hinder their full potential. To address these challenges, we must strengthen intra-Africa trade through the African Continental Free Trade Area and ensure that women-led enterprises are prioritized in trade policies, funding, and market access.
Similar conversations continue at the three-day summit with more perspective and ideas set to be shared.
And our capital market stakeholders, they also came together to celebrate International Women's Day, recognizing the vital contributions of women in driving growth and innovation within the financial sector. Events highlighted the importance of gender equity with a focus on empowering women to take on leadership roles and shaping the future of Nigeria's financial markets.
The Nigerian Exchange Group and its subsidiaries joined the rest of the world in commemorating the International Women's Day, a global celebration of the achievements, contributions, and progress made by women across all sectors.
As the Minister of Art, Culture, Tourism and the Creative Economy, I have witnessed firsthand the transformative power of these sectors in driving economic growth and in social change. However, the reality really does remain the same across the industries, boardrooms, markets and homes. Women continue to face barriers that limit their potential. Unfortunately for all women, not everybody has the digital DG as their head. So we need to encourage more industries, more private sector players, more government. I mean, we need to start with government first of all and at least get that 30%.
For the NGX, this is not just a celebration, but a commitment to continuing the journey of creating more inclusive environments for women in the financial and business sectors.
We are committed to equality. In fact, if you look at some of our entities, you find more women, representation than otherwise. It's something we take very seriously. We've been in partnerships that, straddle several years with organizations like the IFC, like the UN. And as I said, a day like this reminds us of how much more we have to do.
Still in the capital market, investment platform iInvest also took out time to celebrate women, emphasizing the role of women in wealth creation. At the event, the keynote speaker, Tara Fela-Durotoye, the founder of House of Tara International, highlighted the importance of redefining financial narratives for women.
We have some mindset shifts that need to take place around money. And because we've been acculturized to see things a certain way, there has to be some unlearning and relearning, some learning and some relearning, some learning and some relearning, to say, I'm not going to wait for a man to come and make me rich. No. I'm also not going to wait for my father's estate to make me rich.
Toby Olushoga, the Chief Operating Officer of iInvest, stressed the crucial role of shifting mindset in unlocking true financial empowerment.
Money it gives us the power of choice. It allows us to make decisions to live the life that we truly want to live. Mindset, that's where it starts. Everything starts in the mind. If you don't believe you have the ability to make wealth, then you really can't make it happen. And momentum. It's just small, consistent actions that lead us one step closer to our goals.
As the capital market celebrates women this year, participants agree that financial literacy is critical for young girls so that when they become women, handling finance prudently becomes second nature. As said by Claire Booth Lucci, American author and U.S. ambassador, a woman's best protection is a little money of her own.
All right, now to our first conversation. Well, filing annual tax returns is a cornerstone of tax compliance, and the Lagos Internal Revenue Service have introduced a series of reforms to simplify the process and boost taxpayer engagement. Now, let's hear more now from Mr. Abedin Conde, a special advisor to the Executive Chairman, LIRS. Joining me right here in the studio. It's great to have you.
Same here.
Good afternoon.
Thank you very much.
So, happy International Women's Day. We're still celebrating women. Quick question. Which gender is more tax compliant, the men or the women in Nigeria or in Lagos?
Okay, I think it's fair to say both because essentially it's the compliance rate that we have, it's a function of the economic spectrum. So you'll find out that most of the people that are complying are those that are in the upper middle class with women and men.
And men.
Yes.
But I know some women will say, we are more compliant than men. Anyway, let's look at some reforms now happening. Talk to us about these reforms and why they're happening, at this point. Are we moving more steps ahead, when it comes to, tax compliance, tax collection, and all of that?
Yeah, because reforms within Lagos State or at the national level?
Lagos State, especially.
Lagos State. Okay, essentially what we have done in Lagos State is very simple, is that we have automated our processes so that it will make it easier and cheaper for you to comply. You see, the most important thing to know is that tax itself is a burden. So there's also the cost, aside from the cost of paying the tax itself, then there's also the cost of compliance. So what we have, and the challenge that most people and most agencies have globally is that, you see, because most of the laws are dated, the penalty for compliance is already fixed. You can't adjust it because that's the way the law is. So if by chance the cost of compliance is higher than the penalties that you are practically incentivizing people not complying. So for you to incentivize compliance, then you have to reduce their cost, and that's what we have been doing in Lagos.
Right. So when you say the cost of compliance,
yes,
and the cost of actually
the tax itself,
yes, itself. So we've seen a mismatch.
Yeah.
There for a while.
Yeah. So that's why I said that's the major challenge we have. Most of the laws that we have were basically take for PIT that we do. The last time it was reviewed was 2011. If you know the price dynamics in 2011, that does not work today. So the penalties that were set in 2011, definitely, if we don't do things about it, it will incentivize people not to comply as well. If the penalty I'm going to pay is not going to be as high as the cost that it will take me to comply. So
that means we should expect the penalties to rise higher?
Ideally, not necessarily. What you should have is that you should find a way to reduce the cost of compliance. That's what any good forward-thinking tax authority should do, so that you can drive down the cost of compliance. And what I always give people is a very simple example. Imagine if you're in a university, you got to pay 1,000 naira in 5 different places: tuition, boarding, library, sports, and then student union or student affairs. And you have to do 5 times. You understand? So for every time that you queue, you're actually incurring cost. But imagine if they're able to just pay it only once, and then at the back end, the boss is able to just distribute. So that's the way we are thinking in Lagos, and that's the way we are doing things.
Right, and definitely, some people, when they hear reforms at this point, they feel it's going to be painful at some point. So, talk to me about these particular reforms. I hear there have been arguments, against them, so far. So, what do you say are the concerns, and how do you, address those concerns?
I think the best bet for me is that let me put my cap down as SA to EC of LRS, and then talk to you on the reforms as a Nigerian with economics background and with flair for developmental economics. Now, the reforms that you have, if you claim to put in place structures for reforms and you don't have pushback, then it means you have not carried out reforms. That's number one. So, and importantly, from the feedback that we have seen so far, I can tell you clearly that 90% of the pushback that we've seen so far is driven principally by what I can call ignorance, which you can cure with engagement and explanation. And then there's mischief. That one is difficult to address. Then, of course, there's the issue of fear. People fear things that are new, that they are not used to. And we've seen it demonstrated by one of the very respected public personalities. And the fear was that, how are we going to pay salaries of our staff? But if you read through, you will see that there's humongous opportunity to improve. But don't forget, let me be clear about it. The primary focus of the reforms that we have is not revenue generation. The primary focus is on easing the environment to do business, so that when people do more business, there is the opportunity for you, even if you reduce the tax rate, you get to put more in the pocket. And also, more importantly, to sort of provide relief to those people at the lower part of the pyramid, so that you can put more money in their pocket. And when you put more money in their pocket, they will spend it, the economy will grow. And if people understand it that way, then we won't be having this issue of pushback. I can give you 3 examples. The first one, we had a legislator who, fair enough, he was very open and honest, said, I have not read it, but I have it, I don't like it. And he now said one that actually got me was that, he said that if this is somebody that is paid from taxpayers' money, and he's also paid to engage and employ legislative aides that should help him to understand some of these things. He said he has not read it. And to make matters, and I said, if I even read it, I'm still going to go against it. So that one is mischief. You can't cure that one. Now, where the second one is there's a professor with 1,001 certification that wrote some, all this social media, what I call them.
A lot happens in social media.
Social media, something called conflict entrepreneurs. That's what somebody called them. And said that, they're introducing inheritance tax. No new tax is being introduced under these reforms. The section of the law that he was referring to is under personal income tax. It's what we call family tax. Because the family is a group of people. So it is only when the family disburses money to the members of the family that it becomes taxable in their pockets. It has always been there. It has always been since 2004, 2011. It is still there today. So that one also is a form of Then the most one that actually got my meat was the NLC. NLC said they don't, January this year, they don't want the reforms. And he said, you withdraw it. For what? Now, 85% of membership of NLC people are going to be zero rated. Because these are the people that are, the junior staff. So now, just yesterday, I was reading one of the papers. I think it is in Otueke or whatever. The president of SANU, that is Senior Staff Association of Nigerian, whatever. I think that's the Senior Staff Association in the universities. So that this thing, they don't understand it, that the tax is too much for the people at the minimum wage level. The minimum wage has moved from 30,000 to 70.
Right.
So from 360 to
well, we still see some state governments, struggling to pay.
But they are paying the universities. But what has happened is that you see, at the 360 level, the tax due under this current regime is just about 400 naira. Now, because the minimum level has moved to 840,000, now, because we have not changed, because we have not passed this law, the tax being paid now by those people at that minimum level has gone to about 3,000 or thereabout. You would think, yes, 2,600 may not be something to you, but for those people at that level, so you could see the pain in him. But I just felt that you are addressing the wrong audience. The person you should talk to are your executives, that they should see to push through these reforms. Because if it is pushed through, I can tell you honestly that if these things is done, it's passed, we are able to maintain the minimum wage of 770, that's 840, and Naira finds its level. Because what we have in the Naira now is not the correct level. If it finds its level, you will be lifting within 18 months to 24 months, nothing less than 25 million people out of poverty.
Right. All right, but before I let you go now, talk to me about key documents and information needed for this, for filing for individuals. Yeah. I know it's about that time, March 31st.
It has actually started from January now, but the timeline is 31st.
Right.
So what they need to do is very simple. You are disclosing your income from all sources. So what you need to disclose to us is how much you earn from employment, how much you earn from your passive investments. You see, you could have had some rental payments made to you if you are the landlord. If you had invested even in the stock exchange and you have received dividend, don't forget this dividend, yes, it is the final tax has been taken away, but you need to also disclose it because it helps us in calculating and evaluating the size of the economy itself.
But it's not like you're going to collect it.
No. Once you have paid tax, which is withholding tax, which is fine now, we will recognize it. But we will now say that this man that is living in Lagos, his income for 2024 was this amount. When we aggregate everybody in Lagos, we can say with level of comfort that, well, Lagos people, this is how much they earned last year. You understand? So that's the essence of it. And also it's important for people to know that filing is a constitutional requirement. It's a legal requirement as well. And also for us in Lagos administratively, if you don't file, you are not likely to get your TCC, that's your tax clearance certificate. And now you will need the tax clearance certificate to do so many things. So because we need to know who you are, how much you earn, how much you should pay, and whether you have paid it before we can give you a tax clearance certificate.
All right, there you have it. Taxman is out right now, so get ready to comply. Thank you so much, Mr. Akonde, the Special Advisor to the Executive Chairman, LIRS. Thank you for coming on today.
Thank you very much.
All right, so Africa has increasingly become a hotspot for investment, attracting both local and international investors due to its growing economies, youthful population, and untapped markets. As the continent continues to experience rapid urbanization and infrastructure development, sectors such as renewable energy, fintech, and healthcare are emerging as key areas of opportunity for investment. Let's talk to Dr. Hubert Dansono as the CEO, Africa Investor Group, an institutional investment holding platform. Great to have you on the show.
My pleasure to be here. Thank you.
Yeah, so definitely I know the institutional investors are looking for the next opportunities in Africa at this point. So talk to me about what you're seeing with Africa's renewable energy industry, especially when it comes to solar, wind, and hydroelectric power.
Yeah, no, thank you very much for this opportunity. It's really great to be able to talk to you about these types of issues from the Sustainable Markets Initiative's Terracotta Roundtables and Exhibition in London. And this is really a platform where you're seeing CEOs from all around the world really focused on how we can scale our institutional allocations to renewable energy assets, green industrialization. And guess what? Africa is the talk of this entire summit. The continent really has some of the best and highest quality critical minerals. It has the best and the highest quality superabundant natural capital valued at about $4.3 trillion. And the missing link to date has really been the ability to be able to align that with institutional portfolios, pension fund assets, sovereign wealth fund assets, to really be able to unlock the unlimited potential for green industrialization in Africa. So naturally, renewable energy forms a centerpiece of this dynamic, and we are really excited. about the conversations that are taking place at this Sustainable Markets Initiatives Terracotta Roundtable and exhibition. So pension funds on the continent are really increasing allocations to renewable energy right across the continent. It's a long-term strategic asset. And one of the things that we've heard here a lot at this SMI Terracotta Roundtable and exhibition is the extent to which, because we have now been engaged, because we have new institutional investor-public partnerships with governments, we're actually rapidly driving down the cost of these technologies. So from an energy perspective, renewables is now much more cost competitive with the fossil fuels, and you're beginning to see all of these different things compounding and coming together. So I think the direction of travel is very clear. You know, renewable energies is really leading the way, and the continent is essentially repositioned with the right type of capital behind it to become the world's global clean energy manufacturing hub. So very exciting times for us, very exciting times.
Right, and I know one other segment investors are quite excited about. I know that's fintech, and we've seen, you know, in Africa that's been growing rapidly, especially with the rise of, you know, mobile payments and which countries, you know, and regions are, you know, pushing to expand more. But where are you seeing the opportunities now? Do investors still find fintech, you know, very interesting at this time?
No, fintech is absolutely a very powerful opportunity for us as a young continent. You know that we're going to have probably about 50% of the world's workforce by the end of the century, and we're a growing market. So fintech is really exciting. But I think if you then begin to look at some of the artificial intelligence and the renewable energy constellations in terms of how we are really developing green industrial cities. And Nigeria is really going to be one of the leaders in this, actually, where you can take an existing special economic zone, or you can take a new area, designate it, put some real incentives in place, and really use this green industrial cities model where you can actually start having renewable energy and green industrial REITs and trusts. You can really start putting up AI-sensitive, sustainable data centers at scale. And that's going to continue to drive this innovation that Africa is really going to be playing a leading role in, particularly with our young, innovative population. So fintech is absolutely a trend, and it's a growing trend. We've already seen a number of acorns and unicorns in Nigeria and across the continent. But I think the one to really watch is this ability to be able to put together sustainable AI data centers that can really drive the sustainability as well as renewable energy rollout and really fuel the fintech growth across the continent.
Right, and definitely we can't have any conversation these days without mentioning artificial intelligence. So beyond renewable energy, fintech, healthcare, and AI, what sectors do you see in Africa that offer, you know, attractive investment opportunities that, you know, some of the big investors are not really looking at right now?
Well, I think they should just be looking at the ones that we've spoken about here. That's why you've got the world's leading CEOs, over 300 CEOs that have come from around the world to the Sustainable Markets Initiatives Terracotta Roundtable and exhibition. The game is low carbon economy transition. The game is green industrialization. And I think, you know, everyone on the continent and around the world is very well poised to be able to take full advantage of that. Of course, there will be some sort of opportunities that emanate from that. But if you really want to get to scale, if you really want to be right at the forefront of this incredible investment opportunity and transition, it's really got to be about sustainable investing and green industrialization and driving renewables and artificial intelligence on and from the African continent.
Right, and I'm talking about the African continent. You know, some investors might not know where to, you know, drive funds into. What do you think should be the factors that, you know, investors should consider when choosing, you know, an African country or regions for investment? We know issues of, you know, when it comes to political stability, infrastructure, and regulation, you know, most importantly.
Yeah, I think all of these things are critical. I think investing in Africa should be exactly the same as investing in any other part of the world. You would look at the regulation, you look at the strength of your partners, you'd look at the legal and regulatory frameworks. and the extent to which you fully understand the sector and the strategy of which you're allocating to. And the good news is, as far as renewable energy and green industrialization is concerned, Africa has got this new approach, which is called an institutional investor-public partnership. So it's really much more suited for long-term capital to align, almost call it Africa's green investment deal, which was driven by a number of heads of state, which really looks at how green industrialization can align with long-term asset allocation. And it's got its own legal and regulatory framework, which investors can basically fine-tune to their own institutional mandates. So I think there's a lot of flexibility you're seeing around the world. There's a real competitive tendency around capital. Capital will go to where it feels welcome. And what we're seeing now is, as opposed to what we had before, which was much more of a development ecosystem of sort of the World Bank, multilateral development banks, our governments are now working much more strategically with the institutional investment community around sustainability, which is the global trend to get those large institutional allocations to drive those multi-trillion-dollar nationally determined contribution investments that we need. One, for our transition, and two, to increase our participation in the $10 trillion and growing global green industrial economy, which hitherto we've been at a very low percentage. But as we add value to that and we increase our share of that global green industrial economy, that obviously provides a big kicker for institutional allocations, which we haven't seen before.
Right, I guess the Terracotta Roundtables and exhibition, that ends tomorrow, and definitely I know you're expecting incredible things with all the CEOs and government officials meeting.
Thank you very much.
Thank you so much. That was Dr. Hubert Danso, CEO, Africa Investor Group. Thank you for coming on today. All right, we'll take a break now. When we come back, we'll head straight to the markets. Let's see how investors are feeling in this new trading week. Do stay with us. Welcome back. Well, let's head straight to the markets. Now we have Anete Edet with the details for this brand new trading week. Great to have you, Anete.
Happy new second week.
Happy new second week.
I'm sure that this greeting, Happy New Week, has now become rather common.
Right.
Because it used to be just once in a while, Happy New Year, Happy Birthday, Happy
So we now do the second week.
Yeah, even Happy New Month. I thought it was disgusting initially, but I think it's now become...
But it's now, you now like it, I guess.
I think it's now a growing trend, which is now being imbibed into every one of us in terms of greeting. But so long as it's a positive greeting, I think I also welcome it. Exactly.
It's like just have a happy month.
Yes, happy month. And it's the second week of March, just like you mentioned. So, but let's talk stocks first, and we talk other sides of business. Starting first with the intraday market numbers. OECS, starting with Nigeria stock market. Last week we saw the market down by about 1.19%. Which is, we had about, the market had about 4 days of downturn there, 4 days of profit taking, which wiped off about 476 billion naira in terms of the country's local currency valuation, and that translates to about that 1.1%. That's not too good for the market in terms of month-to-date performance, and the month is down by about 1.21%, while a little bit too good for the market at for year-to-date 3.51%. But take a look at your board there. Intraday 0.22%. That was the last track that we had over an hour ago. And of course, the market has been able to drop below the 107,000 points, which we initially had celebrated sometime last week. And we thought that maybe the International Women's Day, the appearance of the women's on the trading floor last week would make a positive imprint. But of course, the market has its own mind, and profit takers also have their own mind. But so far, the market is in the green at intraday. But it's not a similar picture for the Johannesburg Stock Exchange All-Share Index. It's down by 0.62% intraday, 88,016.75. And for the Egyptian and the Nairobi Stock Exchange, it's kind of a mixed picture there. Positive picture, positive close for Friday, a tad 0.01% for the Nairobi Stock Exchange All-Share Index in Kenya. And for the Egyptian Stock Exchange, EGX30, down by 0.18% intraday, 31,074.15 for that market entry at intraday. Okay, so now, but before we look at other markets, as well as to have our in-house guests to talk about other sides of the market, let's take a look at what to expect this week for the market. First, we're starting with the Debt Management Office. Last week, we saw the Treasury bills auction, but also we're also seeing another T-bills auction, primary market auction, where about 550 billion naira worth of maturities are expected to be on offer at the primary market auction coming up on Wednesday. And for the equities market, of course, the equities market, like we've been talking about, we saw a flurry of earnings released last week, but of course, the market defied those strong earnings numbers are coming from industrials and so many other across the sectors of the NGX, bringing out their full-year earnings results, but the market has refused to react positively to those earnings numbers, which came in rather favorably. But this time, the markets will be focusing on banks, which are expected to release their full-year result, but there's been that delay on the side of banks, as well as some insurance earnings, as well as dividend announcements. But the market is also monitoring the fixed income environment, the movements there. The yields have been declining across the bonds and the treasury bills. So the eyes will be on that. As well as the National Bureau of Statistics was expected to release the third quarter and fourth quarter unemployment report for the country's economy. Of course, we know that Nigeria's unemployment has not been favorable. The government on its part has been doing things to spur up employment. Well, let's not forget that we had that rebased GDP report. Of course, we'll be expecting that the NBS will also release that the GDP data for the rebased economy, which they said would be coming in anytime between this week and next week. But we'll keep our eyes out on that number. And finally, from the National Bureau of Statistics, the February inflation report, which is going to be the second after the first one was released under the rebased GDP report, which saw it shaving off about 10% from the 34.48% inflation number recorded in December. So we saw that inflation number coming at about 24.48%. But by Saturday this week, we expect that the National Bureau of Statistics will release the second, the February inflation number, which will come up under the rebased GDP numbers captured with the inflation numbers. So whether it's going to go up or down, well, we wait for that report to be released this weekend by the National Bureau of Statistics. So that's a wrap for what to expect from the market, from the Nigeria's financial markets. So, but this time, let's talk more about the fixed income market. And we start first with treasury bills. We saw that last week, the treasury bills market, it was bullish. The average yield there, it declined by 41 basis points to 20.8%. That's for the treasury bills market. And then for the FGM bond market, it was also bullish. Investors reinvested coupon inflows into the short-dated papers, and that drove the average yield down by about 8 basis points to 18.5%, with sell-offs across the curve. So now, when you take this into focus, you'd also look at the other sides of the market, where we see that the Nigeria's forex markets, the forex reserves have declined, have been on a steady decline 8 consecutive weeks, opening the year from $40.92 billion to about lower to about $38.34 billion as at March the 5th, and that marks the 5th straight decline in the country's external buffers. Now, to tell us more about why this is happening and what to expect within the fixed income market space, let's bring in Akpewe Oputu, Chief Dealer with Lotus Bank, to give us details and clarity about this. Thank you for joining us, Akpewe.
Thank you for having us on your program today.
It's a pleasure. Okay, so let's start with the FX side of things. We've seen that this consecutive decline, the country's forex reserve is our firepower to defend the naira, and we see that yes, the CBN has been doing that defense of the naira, which at some point we haven't seen. The naira has gone back lower. So, but what really is driving the decline in the country's forex reserves?
Okay, so as you rightly mentioned, you can see that the central bank has been coming into the market, and we've seen a decline in the reserves. So at the rate we came into January, the NAFEX was trading around 1,548 to a dollar. But now we can see that the rates are a bit stable. We're seeing the rates now around 1,520 naira to the dollar. So that actually shows that the central bank has been coming into the market and trying to ensure stability in the FX market. So we've seen relatively stable rates. in the market, and that's because of the interventions that we've been seeing. So about a total of $27 billion have been seen in turnover between January and March. So it takes a lot for to see this kind of stability in the market, knowing fully well in December we launched the B-March trading system. So we've seen a lot of flows in that market. So I think the central bank are actually in the right path and trying to stabilize the currency. And that's why we've seen the reserve gradually decline. So by about 1.7 billion between where we opened in January and what we have right now.
Okay, Akwa, I think I have to streamline my question. I had 4 questions for you, but I'm just going to go to the last question, which is your forte, and that has to do with the upcoming, with the Sukuk bond market under the Q1 bond issuance calendar, and Q1 is almost ending. So tell us about the latest developments in this market segment.
So we're very positive that the calendar for the Sukuk issuance will be released soon, probably before the end of the month or come April, because we have good feedback that this will happen really soon. So we expect a lot of subscription in that space. For the yields, we expect it to trade around where the 2031 bonds are currently trading. So we expect that the yield should close nothing below the 19% level. So the non-interest banking space, we're anticipating the release of this calendar very soon.
Okay, so we keep that expectation, insights, and thank you so much for analysis on the show, and hope to see you again same time.
Thank you.
Okay. That was Akpe Oputsu, Chief Dealer with Lotus Bank for the Forex and Fixed Income Markets space. So before we get out of it, if we can take a snapshot of the okay, let's take a look at the Middle East market. Middle East market is mostly tepid movement there. We see that the Dubai real estate was in focus, but not too much to mention about that. So it's just a broader picture of negativity mostly across the markets. Now let's talk about the U.S. markets. Stock futures is falling. They're falling this because investors are at the same time. Last week we saw that the U.S. markets, the averages closed Friday, higher after a very volatile week. That volatile week was across all the major markets, including Nigeria, but stock futures, they're really expected to open lower, and this is because of uncertainties surrounding Donald Trump's tariff policy. Of course, we've also seen that retaliatory policy, tariff response from Canada and China, so it's more going out for an all-out tariff war across the major economies. And then finally, let's take a snapshot at the Asian markets. This is what you see. Only these two were the gainers for the close of Monday's trading session, and other markets are in the red. So, Ladi, that's a snapshot for the markets for Monday.
Really fast at this point. We'll see more to the downside. Thank you so much, Anete, for bringing us the details for the global markets that we track and the local bourse. Well, let's get a check on what's playing out in all the economies. Egypt's annual urban consumer price inflation rate that fell to 12.5% in February 2025, down from 23.2% in January. And that's according to CapMass, they're the agency for the country. On a monthly basis, inflation dropped to 1.4% compared to 1.6% in January. I will also see the Central Bank of Egypt made an important announcement today, revealing the issuance of 10 billion Egyptian pounds worth of floating rate notes, treasury bonds. This strategic move is designed to bolster Egypt's financial markets and provide investors with more flexible investment options. The 3-year bond will be linked to a floating interest rate with a coupon rate determined by a specific formula there. That's a coupon with the benchmark plus fixed spread divided by 1 minus 20%, ensuring a variable return based on market conditions. The National Bank of Rwanda and the Capital Market Authority have introduced a draft regulatory framework for virtual assets and virtual asset service providers, a step towards governing digital financial transactions in the country. As you know, virtual assets are digital assets increasingly seen as a key in the capital markets. The proposed law defines them as digital representations of value that can be traded, transferred, or used for payment and investments. All right, let's get a check on what's playing out in Europe now. We see strikes at several German airports today. They're expected to affect the travel plans of more than 500,000 people. Well, join us for more now. We have DW correspondent Chipondo Chimbelu. Great to have you, Chip.
Good afternoon, Laddie. How are you doing?
I'm doing great, but I guess, yeah, those that are trying to travel in Germany, not so good at this point. How much disruption are you expecting?
Yeah, not going very well for most of the travelers, of course, going from or going through German airports today. More than 3,400 flights, Laddie, are expected to be cancelled at 13 German airports amid the strikes, which began early morning. Now, Germany's largest trade union, Verdi, said the strike will end a minute before midnight, and around 23,000 workers who are responsible for checking in travelers and baggage handling are expected to be part of today's work stoppage. And that is why it is expected to lead to massive travel disruption. So it isn't airline workers actually who are striking, but individuals who play a key role in air travel. And what that means is that even transit passengers flying via a German airport today will be affected. And of course, Frankfurt International and Munich International, which are major hubs for international travel, are also impacted. Now, on Friday, Frankfurt International already warned that it was unlikely that any flight will depart from the airport today, and it advised passengers to avoid heading there. So anyone traveling via German airports should be checking with their airline about their flight.
So what would you say the striking workers, what are they demanding?
Well, the trade union wants a collective wage agreement for 2.5 million public sector workers, Laddie, and its demands include an 8% wage hike. Now, that would amount to at least 350 euros more every month for every worker's salary. Now, Verdi also wants higher bonuses for stressful jobs and 3 additional days off. Now, it's worth noting that the trade union is actually calling this a warning strike, and it comes after a second round of wage negotiations for public sector employees fell through. Now, the employers, that is the local authorities and the federal government, have said that Verdi's proposals are not financially feasible, and it would cost local authorities around 11% more, and that's nearly 15 billion euros every year. And the extra time off would actually mean that the authorities would have to reduce the services they offer. At least that's what they've been saying. And these strikes aren't just affecting air travel. They are also impacting other sectors. The workers in healthcare and childcare have also been striking, but local authorities and the government are yet to present a counter offer. So we may get to see where this is actually heading on Friday, which is when the next round of negotiations, Laddie, is set to take place.
All right, we'll definitely be watching out for that. But turning to the markets now, how are European stocks trading?
Well, European shares are trading lower today, and the pan-European stock 600 is actually down 0.93%. Now, investors are concerned about an escalating global trade war and its potential impact on the United States economy. But of course, the consensus for now appears to be that the U.S. economy is resilient enough. And on Friday, we did hear from U.S. Fed Chair Jerome Powell, and he said he is not worried about the economy. Now, coming back to Germany, there is bad news for the country's most likely next government. The leaders of the Green Party group in the Bundestag, that is the parliament, have said that they will not be supporting spending plans recently announced by the Conservatives and the Social Democrats last week. Now, the Green Party votes are needed to loosen Germany's debt rules for the government. And that would, of course, allow the Conservatives and the Social Democrats to go ahead and spend 900 billion euros on defense and infrastructure. And that is, of course, something that was cheered by markets last week.
All right, so much to look out for this week. Thank you so much, Iponda Chibelu.
All right, thanks, Laddie.
Let's get a check on what's playing out with the markets now. And with what's playing, we're seeing red. That's playing out right there. If you look at the Coin 360, that's the sentiment to the market right now. And we see the Fear Greed Index. That's been tending towards fear, extreme fear for most of last week. If you look at how investors are feeling in the market, I'm talking about the Fear Greed Index, extreme fear, 20 points. So investors are still very scared right now with the volatility we're seeing in the crypto market. Now we see for most of the headlines now, at the Crypto Summit, President Donald Trump said he expects stablecoin legislation on his desk before August and urged lawmakers to pass bills on stablecoins and market structure. He emphasized that keeping the US dollar strong remains a priority there. Then a staggering 360 million Dogecoins worth around $62 million has just been transferred. And unlike the usual withdrawal patterns seen in recent days, this one This time it landed on Binance. They're one of the biggest exchanges in the world. And we also see Singapore Exchange to roll out an open-ended Bitcoin futures listing. That's supposed to be bullish news there. But let's bring in Chimezie Chuta now, Chairman, National Blockchain Policy Steering Committee, right here in Nigeria. Great to have you in the show. Hello, Chimezie. All right, Chimezie, you might have to unmute, but a lot of talk about regulation there. We're looking at the headlines. We're seeing Trump also announcing for a stablecoin law. But back here in Nigeria, we're also seeing, regulatory issues or regulatory, talk, happening in the crypto world. And the latest, now we're seeing Binance. They've cut out Nigerian users from a couple of things on their platforms. And the latest, Nigerians cannot get airdrops from Binance. How are you seeing it? Okay, Chimezie, I can't hear you. I think you're speaking, but I can't see. Maybe you might have to unmute. Okay, all right. I will try and get Chimezie back there. Couldn't hear him very well. But, definitely still a lot of talk about regulation when it comes to the cryptocurrency industry in Nigeria. We're definitely going to get more clarity with the Securities and Exchange Commission in Nigeria moving to set up more rules, especially for virtual service providers in Nigeria. All right, let's see if we have Chimezie. Chimezie, can you speak now? Okay. Yes, yeah, we'll try and get him back. Sure. So, all right. So my producer is telling me I have Chimezie now. Chimezie, can you hear me?
Yes, I can hear you very well.
Fantastic. Yeah. So, I don't know if you heard my question the first time. It's about the regulation, the cryptocurrency industry regulation in Nigeria. Definitely not an industry that's easy to regulate. But what are you seeing playing out so far with Binance cutting out Nigerians from receiving airdrops?
Okay, so I sincerely think that Nigerians are being punished because of the incident that happened with the Binance executive that was detained, allegedly illegally, last year. And ever since then, there has been a calculated blackout of Nigerians from the participation in global crypto, blockchain, and Web3 engagements. Now, let's all remember that Nigeria is still blocking cryptocurrency exchange sites. They are still blocking Binance website. They are still blocking Coinbase website. They are still blocking even the licensed companies that were granted recently, Nigerian visual asset service providers like Busha, like QDAX, their websites are still blocked. In other words, there's really no sincerity from the part of Nigerian regulators and policymakers when it comes to embracing this technology. When you look at what's going on in the US and how the White House had a roundtable conference last weekend, I think on Friday, and they are very determined to make sure that America becomes the global center for crypto. Nothing is happening in Nigeria that suggests that we even are taking this technology serious. A few days ago, I was researching on a documentation for a project I was building, and I was building that project on Coinbase blockchain platform Base, and I needed to assess some technical details, but I couldn't because Coinbase is being blocked. So what this means is that Nigerian technology developers, all the people who are innovating, are not having access to the resource that they need. So when you think that you're blocking people from trading crypto, there is a bigger danger because you are cutting them out from the global innovation that is going on everywhere in the world. So that Binance excluded Nigerians from participating in the airdrop is just a minute implication of what is going on. There are a lot of investigative agencies that have vowed not to cooperate with.
All right, seems that Chuta got frozen there, but definitely a lot he had to say there about most of these websites, being blocked. So most Nigerian developers and users can't seem to access them. But we'll try and get Chimezie again to bring us up to speed on how to actually go forward when it comes to regulation. Regulation, definitely not, this is not an easy segment to regulate, talking about, the cryptocurrency industry, but we'll keep watching to see how most of these governments are able to put a hold on this industry. But that's the show today. That's how most of the markets we track are looking. We'll give you an update again tomorrow so you can make that investment decision. Thank you for watching. I'm Lade Williams from me and the team right here at Channels HQ. It's bye for now.